Hi there, and thanks for joining me on this presentation. This is John Thompson. I've been in the mortgage industry for 25 years, and this is just a brief educational overview of the reverse mortgage and some realities and maybe not reputation that you might be interested in learning more about. So what's the conversation start with? Well, there really is a large elephant in the room. A lot of people are hesitant to talk about retirement planning. They're hesitant to talk about money, finances, and how well prepared they are for different events that might come through. So that's kind of where the basic conversation starts. In California, and actually many other, higher cost areas of the country, people are very fortunate, have these homes that are very basic homes or townhouses or condominiums that are great family homes, but are worth a lot more than other parts of the country. And what that means is that there's potentially significant equity, a large part of wealth that is inside of our homes that is not always incorporated into larger financial planning. And so that's part of where this conversation goes with the reverse mortgage. So who is the reverse mortgage designed for? It's homeowners really 62 and older who are looking to retire with a plan or maybe plan to downsize. Maybe they want to eliminate mortgage payments. They want to improve lifestyle, delay Social Security benefits, hold off cashing in other assets, maybe create some emergency funding sources, and then of course the advisors who advise those people at the same time. I'd be remiss in saying I shouldn't also include adult children of those same people who may have some concern of their own. Maybe they're worried about their parents' quality of life and are starting to think about it. Maybe they're supplementing or planning to supplement their parents' income at some point, while at the same time still thinking about their own family and their own situations, considering their own retirement planning. Then, of course, the advisors who work with that population at the same time should be having the same conversation. So a few key points about today's HECM, Home Equity Conversion Mortgage, is what HECM stands for. It's a reverse mortgage. It's a special type of loan that lets homeowners convert a portion of the equity in their homes to cash without having to make any monthly payments. So a special type of loan that converts a portion of equity into cash. So brief difference on forward versus reverse. So a forward you're used to in a conventional forward mortgage, you make monthly payments to the lender, which pays off the mortgage over time. In a reverse mortgage, you receive payments from the lender, and the mortgage is paid off when the home is sold. So there's been some pretty major changes to the home equity conversion mortgage product in the last few years, brought about by the financial crisis. So the product was originally created in 1988, but it went through a massive change in 2014. The changes have happened since 2014 and then more than all the previous 27 years. And there was an act passed in 2015 called the Reverse Mortgage Stabilization Act of 2015, which was designed to help FHA and HUD with that product. So the big three changes are the protection for the non-borrowing spouse. So there's now protection for non-borrowing spouse that did not used to be. There's income and credit underwriting, so you actually have to qualify for the mortgage now and have some kind of income and good credit. So that prevents tax and insurance defaults. And there's limitations on the amount of money you can get in year one, so that slows down the home equity withdrawal and helps the line of credit grow potentially in the reverse mortgage. So who's eligible? You got to be a homeowner, it's got to be your primary residence, and you have to be over 62 years old. And then beyond that, there's a bunch of different tables and formulas that determine how much you qualify for, and of course, each person is unique and individual when it comes down to the amount of money you can borrow. The properties have to be a single-family home. It must be an FHA-approved condo or a 2 to 4 unit owner-occupied property, so multiple units, but up to 4 units, and you must live in the property. So again, single-family, FHA-approved condo or townhouse association, and then a 2 to 4 unit owner-occupied. So what are the primary reasons that people look at reverse mortgage? Well, maybe they want to remodel or update their home. They want to refinance to no payments. Maybe they want to buy a home with no payments. They'd like to travel, maybe pay for assisted in-home care, because again, you have to live in the property. Remove the stress of trying to make ends meet month to month. Maybe age in place and keep your home and change it to a place where you can enjoy time there. Debt consolidation, defer Social Security, avoid selling stocks or a financial portfolio in a down market, create an emergency fund, maybe fund grandchildren, I like that one, and maybe gifts to family would be another option there. So there's kind of three primary buckets when you think about home equity conversion usage. There's a refinance, there's purchase strategies, and there's retirement planning. I'm not going to go into all these, but just a brief touch on kind of the bigger picture here. So retirement income planning is one area that's growing a lot in the last couple of years. And there's things like around goals around income or contingent expenses or maybe even legacy planning. And again, the home is not often incorporated into this type of planning, but with a reverse mortgage, it potentially could be. what are the risks that face people with retirement income planning? There's reduced earnings capacities, the longevity risk, how long you're going to live, long-term care and the expense of long-term care, sequence of returns risk, which is how you may have to take money out of your portfolio in a down year, and that really ruins the flow of money out of that. There's spending shocks that might happen, declining cognitive ability, and of course public policy might change and things might change within our government and so forth. Right, so what are some big concerns? And we're just about done here, but the big concerns: loss of equity and negative amortization. Keep in mind rates can go up and down. You can manage the draws over time, and of course we're hoping there'll be real estate appreciation. Oftentimes we've found that real estate appreciation actually outpaces the growth of the reverse mortgage. So if people are interested in preserving the estate and protecting it at maturity. So one of the big features built into it is that the estate can buy the home at 95% of the market value, no matter what's owned on the property. So the home could be upside down, you could own more than the home is worth, and yet the property, your estate, can buy it at 95% of the value. It's a non-recourse loan, meaning that the only recourse for the mortgage is the house itself. No other assets are at risk. There's no penalty, and of course the borrower has title to the property. This is not a loan where the lender has anything else. The borrower actually owns the property and has title. Sometimes people are concerned about the costs, and the cost. There's an origination fee typically to the lender. We're seeing more and more that those are zero these days. It's rare that we see ones with origination fees. There is a mortgage insurance premium that's controlled by HUD and by FHA. And then there's the third-party fees, escrow, title, appraisal. Those are the same as any other mortgage. There's no difference there. And oftentimes we're seeing credits from lenders. So the cost has come down. The biggest cost typically is a mortgage insurance that's built into these that protects the pool of money within these products. And of course, if you compare to other strategies, the cost is actually pretty reasonable. So that's really the highlights of the product. Happy to share any information anytime. You can reach out to me, John Thompson, at the number on the screen, 888-265-2445, or reach out to whoever showed you this video, and I'm sure they can reach me. Thanks very much.